Have you been trying to figure out how to get on the property ladder? Maybe you're renting your current accommodations and you have a great landlord, good relationship, or maybe you're a landlord with a fantastic tenant and you're looking to get out of the property rental game and considering selling your property to your current tenant. It's a quick and easy way of making sure that you get the right person in there and you don't have to go through the hassle of going to an estate agent. Today, I'm going to be talking you through a concessionary mortgage. It's a product that a lot of people don't know about. So, as always, I'll tell you the pros, the cons, and give you enough information to be able to make an informed decision. Hi, my name is Anthony Lindsay, and I've been doing finance for over 30 years, so I know a thing or two. I make these videos to share information about mortgage products and just finance in general. So make sure that you like, share, and subscribe. And if you have ever have a topic that you'd like for me to talk about, make sure you put that in the comments. So today we're going to be talking about concessionary mortgages. What is it and how might it benefit you? So, a concessionary mortgage is when a property is sold below the market value, often between people who already have a relationship, like family members or landlords and tenants. The difference between the sale price and the market value is called the gifted equity or the vendor gift. This acts as the buyer's deposit. So this is one of the great things about the this mortgage type. If you are buying a property from your landlord and maybe you've struggled to come up with a deposit, this is a way of using that discount that they offer you as the deposit towards the product or towards the mortgage. So this can mean that essentially there's not as much money coming out of your pocket. It's a win for you, it's a win for the landlord because the landlord then doesn't have to worry about going to an estate agent. So let's just do a quick example of what it might look like. Let's just say you have a property and the market value is 500,000. But then the landlord decides to sell it to you for 450,000. So there's a 50,000 pound difference, and that could be used towards the deposit. So a concessionary mortgage is a good way of helping the buyer save money as far as the property purchase, and it can help the landlord move the property a lot quicker. So let's just go through an example of what it might look like as a landlord, because a lot of landlords, because of the new renters' right bill, are leaving the property market or they may be switching over to commercial. They don't want to go through the hassle of having people rent properties with the new bill that's going into force. But they also don't want to go through the stress and the headache of going to an estate agent, having people come in and out, having a bunch of time wasters who may not actually be serious about buying the property. So in this example, you have a landlord is an existing buy to let market, and due to the new tax rules and the regulations, they're looking to exit. They offer the property to their tenant who's lived there for about 7 years. The property is 220,000, though it's worth 250. So they're going to sell it for 220,000, although it's worth 250. Now you might ask yourself, why would they do that? Because they might go out on the market and it might take 4 months, 6 months, 8 months to find someone who's actually serious about buying the property. And in that time, it's a lot of stress and a lot of headache, and you may not be able to find someone to buy that property. Why not sell it to your current tenant? It will be quicker, it will be easier. So in this, the tenant secures the concessionary mortgage using the 30,000 pound gifted equity as their deposit. So there's no need to save the lump sum. Everyone wins. It's a quick sale. There's no agent fees, and loyal tenant becomes a house or a home owner. And that's what we all want. There are a lot of people trying to get on the property ladder who this can be perfect for. It may also be a situation where there's a family member that owns a home. Quite often, an older couple might be downsizing. So in this scenario, parents are downsizing and they sell their home worth 400,000 to their daughter for 350,000. So the £50,000 discount is treated as a gifted deposit. The outcome is that the daughter gets on the property ladder with a smaller mortgage. Parents avoid market hassle and help with the generational wealth building. I talk about it all the time, and I'm passionate about generational wealth. And one of the best ways of creating generational wealth is through passing on property from one member of the family to another. Now, as always, I like to go through the pros and the cons. So every product's going to have some good features and some bad features. So first, let's just look at some of the pros. So there's no or potentially a minimal deposit needed. This is usually the stumbling block for people where they struggle to come up with enough for the mortgage. So the gifted equity often meets the lender deposit requirement. Sometimes it doesn't. So that's why we will be talking about specialist lenders. It's faster, smoother sales process, especially when the buyer and the seller already know each other. So it might be a tenant. So it helps the buyers who can't save a large deposit get on the property ladder, and it can reduce the overall borrowing. So maybe the issue you're having is not just the deposit, it's that your income is not enough to get a mortgage for the property price that you need. And the concessionary mortgage can help with that. Now we're going to go through the downside. And always, as I say, do your due diligence. Make sure you speak to a broker. My videos are not here to replace speaking to a qualified professional. They're just here to introduce you to products that you can then go and speak to your mortgage broker about. Here are some of the cons. The property must still meet valuation criteria. This means that the lender still needs to feel that the property is worth the amount that it's being purchased for. So lenders will check the true market value, not what you think it is, not what you hope it to be, but the true market value. There are potential tax implications, especially for gifted equity between families. So make sure you speak to an accountant. Gifted equity must usually be non-refundable. So you can't do this thing where you say it's gifted, but you actually have to pay back. And not all lenders will accept concessionary purchases. This is why you need to go to a specialist lender. Now, you may not know what a specialist lender is. We will go through that, and I do have other videos on that. And as always, make sure you like, share, and subscribe. And if there's a topic that you'd like for me to talk about, be sure to put that in the comments. My name is Anthony Lindsay, and that has been just a little bit about concessionary mortgages. They're ideal for parents who potentially want to support their children because they're selling their current home. The parents are, because they're downsizing, and they want their siblings or their kids or grandkids, whatever, to be able to buy that property at a discount. And it's fantastic for landlords. Thanks for watching, and make sure you like, share, and subscribe. Do you know what a specialist lender is? Do you know what the purpose of a specialist lender is when it comes to mortgages? A lot of people are out there and they're not the vanilla client. So they're people that may have had credit bumps in the past. They may need a concessionary mortgage. They may have been self-employed for less than 3 years and they're looking for a mortgage. Today, I'm going to explain to you how a specialist lender works and when a specialist lender may be the right person to talk to or for your mortgage broker to talk to. So specialist mortgage lenders can help if you need a concessionary mortgage, if you're a contract worker, you've been self-employed for less than 3 years, or if you have credit issues, or sometimes you just have a complex need that the traditional high street lender will not be able to meet. Now, let's look at what the definition of a specialist lender is. It's a special mortgage lender is a financial institution that provides mortgages to individuals whose circumstances don't align with the standard lending criteria of traditional high street banks. So when you go to your high street bank, they usually have a target market, and quite often the process is very automated. You don't have that individual person looking at it at a case by case. So these lenders offer more flexibility and may consider factors like poor credit, unique income situations such as expats or people that get paid in Bitcoin, or other complexities that high street lenders may not accommodate. So in normal terms, it's for regular people. Um, you do have people that are what we call vanilla clients. So a vanilla client would be UK passport, good salary, potentially over 75,000, someone who has no credit issues, is paid PAYE, and has a sizable deposit. For those type of clients, they should still go to a mortgage broker, but there'll be a lot more options. But if you're like a lot of people, and maybe you've had a credit bump, you're a contractor, you're an expat, you need a concessionary mortgage or something like that, then you might want to consider a specialist lender. The high street banks are great, not going to knock them. I've been a bank manager at several high street banks, but they tend to have limited products. They have set criteria and they have inflexible hours. So, as a mortgage broker, I kind of work around when my clients need to speak to me. So, I'm available on weekends if needed. I'm available in non social hours. Whereas with your bank, you're not going to have that flexibility. And even when I worked in the banking industry before I started focusing on just doing mortgages, I thought that the only time that you should go and see a broker is if you have credit issues or if you have something that comes outside of the high street bank's criteria. But what I now know and what I try to tell people, and I want you to understand, you should always speak to a broker, because a broker is going to be able to look at all the different lenders and give you the best options for you. So if you go directly to your bank, it is a little bit easier because quite often you feel you have a relationship with them, etc. But they'll only be able to talk to you about their product. So they may be giving you their best rate, but it doesn't mean that it's the very best rate that is available on the market. Also, the incentive structure is different in that a mortgage broker is going to also talk to you about protection. A mortgage broker is a relationship business. So we go the extra mile to make sure that you refer us to friends and family. A mortgage broker also, in my case, for example, we do a help to find service. So I actually will assist you in finding the property. I'll help you negotiate the deal. A lot of things that the bank staff will not do or do not do, because there's not really an incentive for them to do that. They're salaried employees. You're going to them. They don't have to really sell themselves because you're already bought in to that particular lender. So you should always speak to a broker. Make sure it's a broker that's been referred to you by someone you know, someone you trust, and someone that they have used themselves recently. It's good to look at reviews, and it's also good to get referrals, but you want to make sure that that person that's referring the broker has used them themselves. And your broker should always put your needs first. Your broker sometimes has to protect you from yourself. So make sure that you're open and honest with your broker, because as we talk about specialist lenders, there's a lender that will lend for every circumstance. So always be open, honest, and your broker will find you the best lender. If you're a contractor, you may have found it hard to get a mortgage, especially if you are paid through an umbrella company. So today I'm going to cover off a little bit about specialist lenders and how they can help if you're a contractor and maybe you're between contracts or you are paid through an umbrella company. So in most cases, it's going to require a minimum of 12 months track record of contracting, A few mortgage lenders can consider day one contractors with relevant industry experience in a previous employed role. The current fixed term contract must have at least 3 months to run. Some banks and building societies require 6 months. So the day one contractor situation would be someone, let's just say I have clients who are social workers and they've worked for the council or they've worked for the NHS or whatever entity for many, 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 many years as a PAYE employer. They've decided now for flexibility or because it's more money for whatever reason to become contractors. They move into a contract and they've just started their contract. Some lenders will consider that because they have the history of working in that field previously. If you are just starting contracting and you've never done anything in that field and you don't have the right contract structure, you may find it difficult, but there are lenders who can assist in that circumstance. So if you're a contractor, 9 times out of 10, going to your bank is not going to get you the result that you need. This is why you're going to want to speak to a mortgage broker. When you speak to your mortgage broker, particularly if you're paid through an umbrella company, they'll be able to find the lender who they know will lend to you. One of the worst things that you can do is go directly to your bank, maybe not disclose everything because you weren't asked the right questions because the bank staff are quite busy. They give you an agreement in principle that has not been validated, meaning they haven't asked those probing questions. Then when you go to make the purchase, you get a decline. You're told that they're unable to proceed. That's one of the worst things that can happen because when you then apply with another lender, so hopefully at this point you'll have learned your lesson and you'll go to a mortgage broker. One of the questions that will be asked on the application is if you've ever been declined a mortgage. This is one of the many benefits of going to a mortgage broker. As mortgage brokers, we'll be able to look at the criteria, we'll be able to speak to the lender before we do an application or do a search or do anything to make sure that you meet that lender's criteria. We'll also be able to go over an illustration with you that you get a feel for what your monthly payments would be, what the interest rates are, etc. And if you watch any of my videos, you know what I'm going to say now. Don't get too tied down to interest rates. Quite often I have clients who, watch the news and they see the Bank of England has raised rates or lowered rates and they talk about rates. Rates are very personal to you, your circumstances, the lender you go to, and what outcome you're trying to get. That's why I do these videos, that you can have a more informed conversation with your broker or even with your bank if you decide to do that, because you'll understand some of the concepts. I'm not giving legal advice or accounting advice, and these videos are not designed to replace speaking to a licensed professional. So make sure you do your due diligence. But I can tell you, if you're a contractor, there is hope and you can get a mortgage. Some of the things that you're going to want to confirm: are you paid via an umbrella company? If you are, there are some lenders that will not lend to you and they will ask questions about the umbrella company. So make sure that you understand, and it's a reputable umbrella company. There's been some nightmare stories about umbrella companies in the news. What does your contract say? Does your contract say that your contract ends on a certain date? Does it have an option for a renewal? What is the notice period? Most contractors I know are quite proficient in negotiating their contract, so that shouldn't be a problem. How long is left on your contract? And are you currently between contracts? These are going to be the key things that you're going to want to talk to your broker about. As I said, my name is Anthony Lindsay, and I've been in finance for over 30 years. So I am able to give you a breadth of information. I've done collections, I've done wealth management, and I've done mortgages. So when you speak to me or when we have a consultation, I'll be able to answer questions about credit and other things. That's why I do these videos, that you can have the information that you need before you move into having the conversation with a broker. But if you're a contractor, make sure you reach out to a broker who understands the specifics of being inside or outside of IR35, and someone that can give you the best advice. Thanks for watching, and make sure you like, share, subscribe. And if you have any topics that you'd like for me to talk about, make sure you put those in the comments.